When it comes to the gold mining sector, there's a few different tiers of producers. First, you've got your small scale guys doing under 100,000 ounces a year. Then you've got your small scale producers that are sub about 300K in annual production. Next comes mid tiers at a range of 300,000 to a million ounces, which is where a lot of respectable names sit. Then there's your majors, who produce over a million ounces a year. Some then say there's a category called super majors, who are above the 2 million ounce a year mark. And then there's whatever the heck you want to call Newmont, who in 2024, without a doubt, blew its competition straight out of the water with some eye-popping production numbers. And quite frankly, unbelievable cash flow figures. Guys, we're talking Newmont, we're talking Q4 earnings. Let's dive in. Newmont in the fourth quarter reported revenue of $5.7 billion, which was a 30% improvement on a year-over-year basis. Obviously, this was impacted by the jump in the price of gold, which rose from $2,004 last year to $2,643 in the fourth quarter of 2024. Costs and expenses for the quarter totaled $3.7 billion, which was a sharp decline from the $6.8 billion recorded in the year-ago period. Although Q4 2023 results were skewed by $1.9 billion in impairment charges alongside $1.2 billion in reclamation and remediation expenses. This led to net income attributable to shareholders in the fourth quarter of 2024 of $1.4 billion, or $1.24 per share, as compared to a loss of $3.2 billion or $3.23 per share in the year-ago period. Adjusted net income totaled $1.6 billion, or $1.40 per share in Q4 of 2024, as compared to $452 million, or 46 cents per share in the fourth quarter of 2023. Cash from operations before working capital improved 200%, moving from $787 million to $2.4 billion on a year-over-year basis, while free cash flow jumped from negative $304 million last year to $1.6 billion in the fourth quarter of 2024, which was a new record for the company. For the full fiscal year, Newmont recorded revenue of $18.7 billion, which was a massive 58% improvement on a year-over-year basis. Costs and expenses, meanwhile, increased from $13.5 billion to $14.2 billion. This increase, however, didn't come anywhere near to offsetting the revenue improvement, leading to a 234% improvement in net income for the full fiscal year, which jumped from a loss of $2.5 billion or $2.97 per share to an income of $3.3 billion or $2.92 per share. On an adjusted basis, net income improved 201% to $4 billion or $3.48 per share from $1.3 billion or $1.57 per share in 2023. Adjusted EBITDA for 2024 totaled $8.7 billion, which was a 106% improvement from the $4.2 billion recorded last year. But the real story here is cash flows. Cash from operations before working capital improved from $3.3 billion to $7.3 billion, while free cash flow improved from $88 million to $2.9 billion. That's a 3,200% improvement. 3,000%. That figure is like 2 quarters worth of net income. That's nearly 16 cents of every dollar of revenue going straight to cash flow. Anyways, 2024 saw $1.1 billion in dividends returned to shareholders, while $1.2 billion was spent on buybacks. The company reduced their debt by $1.4 billion over the course of 2024, ending the year with $3.6 billion in cash and cash equivalents, with total liquidity of $7.7 billion. All right, onto the production figures. This is where things really sound crazy. Newmont in the fourth quarter, that's one single quarter, produced 1.9 million equivalent ounces of gold. That single quarter nearly places them in the category of a super major. Production was up 9% on a year-over-year basis from 1.74 million ounces in Q4 of 2023. Given the rise in the price of gold, cash costs were up a bit on a year-over-year basis, with cash costs increasing from $1,086 an ounce to $1,096 an ounce, while all-in sustaining costs managed to decline marginally from $1,485 an ounce to $1,463. For the full fiscal year, production totaled a whopping 6.85 million equivalent ounces, which was up 23% on a year-over-year basis from 5.55 million ounces last year. While a breakdown was not provided for the fourth quarter, production for the full year totaled 5.7 million attributable gold ounces from Newmont's Tier 1 portfolio, as well as 1.9 million equivalent ounces of copper, silver, lead, and zinc, which includes 153,000 tons of copper. Cash costs for the full year increased 7%, moving from $10.50 to $11.26 an ounce, while all-in sustaining costs rose 5%, going from $14.44 an ounce to $15.16. So what does 2025 look like for the mining giant? Well, production is expected to fall quite a bit, with guidance calling for 5.9 million gold equivalent ounces. The guidance represents a 14% decline year over year in production figures. However, there's a pretty solid reason for this. Newmont has been selling off a number of their non-core assets. 2024 alone saw the divestiture of Ichem, Crystal Creek and Victor, Eleanor, Musselwhite, Porcupine, and Telfer mines, alongside Newmont's 70% interest in Havieron. Only 2 of those sales had closed by year-end, so 300,000 ounces of production in the 2025 guidance figure is attributable to these assets before their sales are expected to close. The Tier 1 portfolio, as a result, is expected to see production of 5.6 million ounces in 2025. Co-product production is expected to consist of 118,000 tons of copper, 28 million ounces of silver, 90,000 tons of lead, and 236,000 tons of zinc. Across all assets currently held, cash costs are expected to come in at $1,200 an ounce for the year, while the Tier 1 portfolio is expected to have consolidated cash costs of $1,180 an ounce. All-in sustaining costs in 2025 are expected to come in at $1,630, while AISC for just the Tier 1 portfolio is expected to be slightly lower at $1,620 an ounce. And in terms of capital expenditures, $1.8 billion has been allocated to sustaining capital in 2025, alongside $1.3 billion in development capital. $525 million is expected to be spent on exploration. 2025 is also expected to see the end of Newmont's divestiture program, with sales now announced for all non-core operations and its interest in the Havieron project in Western Australia. The only asset left to be sold off is the coffee project in Canada's Yukon, with a potential sales announcement for the asset potentially extending beyond the first quarter. Total proceeds from that divestiture program total $4.3 billion, which includes contingent payments. All right, so let's wrap it up. Newmont is a name that many investors have mixed feelings about. Over the last 5 years, the share price is actually down about 5%. However, the last 12 months have seen the equity rise about 40%. But despite share price performance, there's no denying that the company is a behemoth and the clear leader in the gold sector. I mean, this company posted more cash flow in just the fourth quarter than many of its peers posted for revenue for all of 2024. Steering a ship this size isn't easy, but based on these latest results, they're doing a fine job of it. All right, guys, we are in the thick of earnings season. If there's names you want us to cover, let us know in the comment section. Also, we appreciate those of you who have been saying really nice things to us, that you're really enjoying this coverage. It honestly motivates us. I got goosebumps just talking about it. That's how much it means to us when you guys leave nice comments. Tells us that all this hard work is paying off. So thanks for that. And also, if you haven't already, please subscribe to the channel. Thanks for watching, everyone.